Hey, Jim Minton here. Thanks for taking 5 minutes so I can introduce you to the Sierra Core Fund. Our goal is to help you get to or stay at financial independence, which we define as working because you want to, not because you have to. One money manager that we think can help in this process is the Sierra Core Fund. And to learn about that fund, we start by going to sierrainvestment.com. They're a fee-based investment advisor out of California that's known for their unique process of limiting risk while still achieving very satisfying returns. They were founded in 1987, and they currently manage $1.3 billion in assets for retirees and other conservative investments. Where the problem comes in is their minimum account size for new clients is currently $2 million per household. But at the end of 2007, Sierra introduced a mutual fund which has much lower minimums. And so we can go to sierracorefund.com to find out more about that. And as we go here, we find that it's a fund of funds with two goals: to protect your capital and then also to produce satisfying rates of return. Now, as you know, with any investment, there's no insurance that these goals can be met, especially in the short term. There will be some down months and some down quarters, but overall, the Sierra Core Fund has produced very solid investment returns. If while you're there, you need to find the prospectus, and in that prospectus, it'll tell you about fees and expenses and the risks that are associated with the fund. Plus, you can go to page 13 there, and there they'll tell you about the long-term returns that they've been able to earn with the separately managed accounts that have been managed with the same sort of style as what the Sierra Core investment has. If we look at the performance of the mutual fund since it was introduced at the end of 2007 through July of 2011, the cumulative total return had been 42%. On an annualized basis, that figures out to double-digit rates of return in a time frame where the stock market has been negative. So how did they pull that off? Well, when the fund was introduced in 2008, it didn't have a whole lot of stock exposure, some bond exposure at that time. But its stop-loss discipline saw it go all the way up to 77% in cash as we entered that dreadful last quarter of 2008. But what do they say about market timing? That it takes two good decisions. One in order to get out, but then also to get back in. And in March 2009, Sierra set the fund up very aggressively and had it invested in a lot of risk assets, and that produced a terrific rate of return in 2009. As we look at the fund today, it is primarily in bond funds. As we mentioned, it's a fund of funds approach. So it invests into other funds. So Sierra is typically going to diversify your money into 10 or so other funds and then apply its strict stop-loss discipline. Now, this can be a rather expensive way to invest, but the risk-reward has been very good so far. Again, make sure when you go to the website that you check out the disclaimers that are there on the fund, as well as finding the prospectus in order to review that. But we like to have Sierra Core Fund as part of our game plan investing approach, where we diversify you into 10 or so funds as well, like the Sierra Core Fund, and then we monitor those funds to make sure that they're executing their discipline. You know, investing isn't easy these days, and so we'd like to do the hard work of helping you reduce risk in order to increase returns. To learn more, you can shoot us an email or give us a call. We can send you our game plan questionnaire to start the process. No cost in order to review that for you, and we can see and decide if we're a good fit in order to work together.